Hello, good morning, welcome everyone. Thank you very much for joining us on this morning's episode of True Potential's Money Markets. In today's video, we would like to look at the UK GDP numbers released this morning. Following on from Kevin's video in yesterday's True Potential's Morning Markets, Kevin looked at the UK labour data that was released yesterday, and on today's video we'd like to examine the GDP data that was released this morning. Now, there are some trends that we can look at from yesterday's video that apply to today's video. So what was released this morning from the ONS was that UK GDP for the month of July had contracted by 0.5%. Now, this was slightly worse than what markets had expected of a fall of 0.2%. Now, if we compare that to the previous month of June, June posted a 0.5 gain. So effectively, we've wiped out that month's worth of gains. However, if we take a broader view of the growth and compare the last 3 months worth of economic GDP data to the previous 3 months, we can actually still see that the UK is on an upward trajectory of economic growth. Now, looking through the main sectors of the UK economy, being the manufacturing side of things, services and also construction, we saw weakness in all 3 of those sectors. Within the ONS report, they also contribute some of this extra weakness in growth due to labour strikes that we saw during the month of July, but then also wetter than expected weather conditions impacting things like retail during the month. Now, in Kevin's video yesterday, he highlighted how some of the labour data is changing in terms of what we're seeing from the private side of things, and that feeds through in today's data. What we're seeing is the lagged effect of the Bank of England's monetary policy tightening cycle, so the increasing of interest rates play through in weakening data, and also what we're seeing through in yesterday's labour market data. However, what we would like to focus upon towards the end of this video is the difference that we see in terms of the UK economy and also the UK stock market, looking at the FTSE 100. As we all know, the FTSE 100 is a more international index, meaning that it generates more of its revenues from international sources rather than those linked to the UK economy. So if you think about how the FTSE 100 has performed over the past month, it's actually the second best performing equity market behind Japan, which the UK and Japan are the only 2 which have delivered positive returns over the month in local terms. And if we think about that on either smaller time scale, being a 1-week period, the UK is actually the best performing equity market. The reason that we're seeing the stronger equity market performance out of the UK compared to different regions is due to its exposure to the energy sector. So it's got a larger weighting to those names that are involved in the production of energy. And as we know from previous videos and podcasts that we've talked about, we've seen the oil price in recent months climb higher and higher, which has benefited those type of stocks and has led through to the UK being one of the better equity markets in terms of performance. Thank you very much for watching today's video, and we'll catch you on tomorrow's episode.